to the Trading Market Technicals Morning Call video for Wednesday, February the 6th. Another wild day in the markets. We have reversal day after reversal day, hinting to us that we could be forming some sort of a tradable top. That has to happen by breaking down. Price needs to take out previous lows. I'll show that to you in the charts as well. Triggers still remain the same on the S&P and in the spiders. Now we do have some market interdivergence today. Yesterday, we had S&P made briefly an intraday high, where the other four sectors did not: the Russell, the Diamonds, the transportation sector, and the technology sector. Also noticing that pullbacks are getting deeper. So that means volatility, as we know, is starting to pick up at these levels. Momentum oscillators are starting to wane. So we're losing its luster to the upside. Now, I just want to make a point here that we can gap up into the opening today, tomorrow, and hit that 1520, 1530 target, and then start to sell off. So that actually could happen. Again, just because we have divergence can actually go away, and that's something that we need to be prepared for, because if it does start to kick in, you want to be able to get aggressively short at these levels, but not until price breaks down and breaks some pivotal lows that we're watching and monitoring. In the meantime, day trades should be the trader's choice, because that's going to limit your exposure. You don't want any risk overnight exposure, unless obviously if you're swing trading and that's what you do, and if you're a longer term investor. But other than that, I'm also seeing defensive names are starting to outperform: utilities, healthcare, consumer staples, sectors such as like cyclical sectors, material, energy, financial. They're outperforming these sectors. So there's definitely clear-cut risk aversion going on here. You could see that. Again, that'll kick in. That's just a warning sign, and we want to see price moving lower, making lower lows on the sectors that we follow, the 5 sectors that we follow. VIX did close above this outside Bollinger Band, which produced a little bit of a sell signal to the VIX, a buy signal to the market. We did get that yesterday. So we just want to keep in mind and watch what's happening. Nothing really has changed on the indicators. I'm going to show them to you briefly, but what I do want to show you is the defensive sectors, how it's actually almost just about outperforming the S&P. But today we have crude inventories and mortgage index. Really not much of market movers here, unless you're trading crude oil. But I just want to let you know. So on the econ data front, really not much to really worry about. But I want to show you, get into the U.S. dollar first. Now, I think this dollar is going to be key here, because if the dollar starts to break out of this confluence area of resistance here, right around the 80-ish area, you're going to have a big clear-cut run to the 200. Now, you notice how the 200 has flatline here. So we want to really watch what happens. Our ratio chart starting to tick up ever so slightly. But if the dollar does pick up a little bit of steam here, and we get a little spook in the markets like we did the other day with Spain, we could actually see some big profit taking. There's a lot of longs buying up here. No question about it, because as you can see, our sell-off was very nominal. We had a one-day sell-off, which was the biggest sell-off in 2013, but remind you, it's only been 5 weeks. So most of these, the pundits say, oh, we have a big down day, the biggest of 2000, it's only been 5 weeks. So it's really not that much of a big deal. And if you're really in front of the screens all day, it is so quiet. I couldn't even explain it to you. It's very, very quiet out there, which is kind of eerie to say that I do think that the markets will get a 4% correction and still be bullish, for that matter. So remember that. If you're looking for some sort of a short opportunity, we'll probably get one. It'll be probably quick and rapid before they start buying the markets back up again, at least testing the highs. Okay, so we have the dollar. We want to watch the dollar, what the dollar's doing. Copper here did break out of the symmetrical triangle and also is above on a weekly chart, which I don't have in front of you, but it is consolidating up here. So maybe it bull flags to the upper end of the range to 375 and then starts to really break out. Now, copper did not move yesterday with the market. So again, just something to keep an eye on, something to watch. This is not something that you're looking to get short the market right away. We'll get into that in a moment, but this is something that copper did not participate in, which you would like to see if you're a raging bull looking for a 1575 target, at least for a test. All right, now take a look at the New York Stock Exchange Summation Index. Now, this is a weekly chart. I do have this here, but I want to show you, we still have 3 full days of trading. We are actually, if this was Friday, we would be on a sell signal. Now, really, we would need another week to confirm. So really, this would take another week to break below this red bar here, as you can see. But it is only 2 days into the week, so this is a little early. But just want to keep in mind, as you can see, it really is good picking bottoms and tops. Sometimes you get a little choppy here. Okay, we had 2 days up and then we sold off, and same thing in here. But usually you'll get a good pop lower here. You'll see the majority. It's a good signal to let you know, and especially that your indicators are extremely overbought here. Okay, as well as the market is. But again, overbought is not a sell signal. Please keep that in mind. Okay, now let's take a look at our consumer staples. As you can see, look what's happening. Market's rallying, so is the consumer staples. Really doesn't happen that way. Now, that doesn't mean it's a rule, but as you can see, consumer staples are rallying. Money's coming into risk adverse assets. Here's healthcare. Healthcare up, actually up again, outperforming the S&P, as you can see. Okay, and let's take a look at consumer staples. I showed you that. Let's take a look at utilities. And utilities a little bit of a lagger, but again, still outperforming the S&P. As you can see here, money running into these safe haven correlated sectors. So that's something that it really has my attention for the last couple of weeks. All right, so let's run into the charts. And as you can see, I showed it to you yesterday. I just wanted to show you, look, we caught the bottom of this range, and as I mentioned yesterday, you can see when volatility starts to pick up, we usually get a market dip, a market correction here. So starting to pick up. Let's see if it does have a little bit of legs here to the upside. But as you can see here, we did have an up day, a down day, an up day. Let's see what happens today. In the overnight session, quiet. S&P minis are up about 175. Really nothing to write home about, but we could pick up a little bit of steam here. Okay, so we did have the S&P. The cash did, but the spiders, we did have a marginal high here as well on the spiders. As you can see here, volume was pretty decent, but our momentum indicators are still rolling over, so that's giving you a sign that momentum is definitely losing its luster to the upside. But we are back into this channel again, so we'll see what happens today on the opening. And here is the 60-minute of the spiders. I'm looking for a new break, 149.70. Give it 149.70 would be the break below, and that's that low here, as you can see here. That was the closing low from the previous day. 149.70 would really get me going to the downside. 149.45 on a closing basis would really get my attention to start looking for some shorts. Now, I have, building your list, I have a great list of shorts that I'm ready for if the market does decide to roll over and give us a little bit of a break here of this just grinding higher, doing absolutely nothing. Okay, so let's take a look at the cash index. As you can see, CCI momentum is starting to lose its luster as well. We did have an up day, down day, and again an up day, and we did take out briefly, ever so slightly, we made a marginal high where our other sectors did not, and I'll show that to you as well. 1520 is still the target on that inverted head and shoulders on the S&P. 60-minute chart, again, just really breaking down in range. My target still remains about 1450, 1470 if we really get going to the downside. But really a close, and if you're following the cash, you want to break 1495. 1495 on a closing basis would get us more excited to looking at shorts on the downside. And look at our MACD and our RSI. Have a little bit of divergence as markets moving up higher here. Again, could go away, but you need to take note of that, especially if you're swing trading. Long-term investor, really not worried about too much because you're able to ride out the storm. Okay, yesterday I came in front of you guys and I said possible head and shoulders pattern. I had the head here, left shoulder, and I said we don't want to get past 1508. Well, we not only passed 1508, but we ran all the way up to a double top formation of 1514 in the cash, and now we have this little bit of a wedge, which we broke down from the wedge at the end of the day. So we have a double top. Let's see if this holds. 1496, big area of support. Look at our volume profiles. As you can see here, 1596, we've got a lot of volume down at these areas. 1496, I apologize, to 1500 is going to be a big area of support. If we break that, then I could see us easily testing 1450, 1470. That would be your first downside target, and then we would obviously need to reevaluate. Transportation sector, as you can see, did not make a high, an intraday high, still hanging in here. Our target area for shorts is still going to be below 102.35 if you're looking for the transportation sector. Just in general alone, if the transports start to break down, it's going to take the Dow with it, and probably the other stocks. So this is the leader of the 5 indices that we follow. Diamonds, again, did not make a marginal high, therefore creating intermarket divergence for our 5 sectors. IWMs as well did not make, and this is a leader by the way, did not make intraday highs, and you can see our stochastics, RSI, and MACD and stochastics are actually lower. So this did not make a high again as well. Apple, real briefly on Apple, had a nice day. Now, if excuse me, this is what we're going to need to do. We need to see this break above it on a closing basis, and then maybe look for a test of the 20-day moving average. So one day does not make a trend change, but it is a good picture to say, hey, we might have a little bit of a bounce. And if a bounce does occur, take it only as a bounce for now until really it proves itself. The MACDs and stochastics are really terrible, and it's going to take some time to unwind this and really start get going. But other than that, I do see further weakness in Apple. This is just a trading stock right now. If you're looking to build a position, I wouldn't do it here. Like I mentioned yesterday, I look for a capitulatory low, some big spike lower on volume, something like this here, but this didn't happen. As you can see, we took it back, and look what happened. One day, sideways, and back lower. So let's see if it does the same, and then break lower. That's the pattern that has been just basic short covering, but we'll see what happens in the coming days. And lastly is the Qs. Qs, guys, trying to break out here again because of a good day of Apple, but we want to see a breakout on volume, and look at the indicators here. Starting a little bit easier, unwind that overbought reading, but again, still looking horrible here. MACD really needs to come in a little bit more, and volume needs to pick up before we start breaking out with the technology sector. All right, guys, that's pretty much it. A little bit boring today. Markets didn't really give us much, but I'm watching to see, I'm looking at some of the risk-correlated currency pairs as well to see and give us clues that, hey, we might have a top. And as I mentioned, if you looked at the daily chart, an up day, down day, up day, that doesn't tell us much. One day does not make a trend. We need 2 good down days, close, maybe take back the third day, a pop, a small weak pop, and then that's when we really get aggressively short. Right now, you should not be short. You should not be looking to get short until the market gives it to you. Obviously, unless you're day trading and you're looking at stocks for relative weakness because you're not looking to buy the market up here. That's the only way I would look to try to participate in the markets. Other than that, be nimble. If you're uncomfortable, cash is definitely a position. It's only going to be a short time. Markets do not go straight up and or straight down. So just please keep that in mind. Right now, the markets is trying to it's getting pulled from bulls and bears, and eventually that'll all sort itself out, and then it'll start getting easier again, and we'll pick up on volatility. And when the volatility comes in, believe me, it's going to be a real good trading in the coming days and months. All right, have a great day, everybody. Please use your stops, and again, if you're uncomfortable, cash is definitely a position. We'll talk to you tomorrow. Take care.